But even if the 10% tariffs stick and you do see the economy kind of slow down and get noticeably worse in the next month and a half, I think that the chances that the Fed will cut grow and grow and grow and grow. And so those haven't been priced in.
Welcome back to Bitcoin.com's Token Narratives, where we discuss the biggest stories shaping the Bitcoin and cryptoverse. My name is Graham Stone, Bitcoin.com's high priest of the Temple of Hopium. Joining us this week are news and research gigabrain, Mr. David Sensel. Bitcoin.com growth lead / trench warrior, Sal Salamat, calling in from Bangkok, where he's attending the Thai blockchain week, which was canceled due to the earthquake, but still a lot of side events, a lot of people in town. Good times. And we're also joined this week by chief scientist, Bitcoin.com chief scientist, Andrei Terentiev. Welcome, sir. How you doing?
Doing well. Thanks for having me back.
All right. It's Liberation Day.
Woo!
I feel free. Freedom in my country is just exploding.
Yes. So obviously the tariff details to some extent were announced. Mostly the tariffs won't actually go into effect until April 9th is what I understand. Now, just summing up the tariffs, if I may, nobody knows really for sure how this is all going to look, but it seems like what we've got is a 10% blanket on every country. That's like a minimum tariff across the board. On top of that, there are reciprocal tariffs, and those seem to amount, at least on paper, to something like half of the rate of tariffs that each of the countries is already placing on the US. Now, the calculation itself is very unclear. Supposedly it includes currency manipulation, tax, and trade barriers. That's how the number that each country is currently tariffing the US is determined, some combination of that. Now, there was an interesting tweet here, I thought, from one of my favorite commentators, Alex Kruger, and he says, "The Trump tariffs formula has no rationale or empirical support. They could have multiplied the price of eggs by the temperature and divided by the average dick size in each country, and it would have made the same sense."
I think from having listened to him, I listen to him every week. I think he's a little butthurt because he is probably not the best position for this. I mean, he did say going into this, he thought it was going to go a certain way. So he was, I think, directionally right. But as I think he's a trader, lower time frame trader. So he's probably
but they
not
know how they
with
calculated it. So I don't know if you saw this, but the actual calculation is basically they just took the trade deficit and divided it by 2. So it's like there is a formula.
Well, yeah, except that is that it? The trade deficit? I mean, how is that defined though? That's, you get into the weeds there, and
so
that's
I think it's
difficult.
like let's say it's America and I don't know, Vietnam. So if America imports America exports 100 million and Vietnam exports 200 million. So basically there's like a 2-to-1 ratio in favor of Vietnam. So then it becomes like 100 divided by 200, so 50%, and then they divide it by 2. So they're going to say the tariffs are 25%. So the interesting thing about it is
by 2?
I don't know. That's the weird thing.
Let's make it friendly. Divide by 2.
Is it's not actually related at all to like the tariff rates. So this is like the weird thing where they're calling them reciprocal tariffs. Like it's not related to tariffs at all. It's based solely on trade like deficit as like the key metric. So,
well, I can get into this a little bit. I don't want to go too far into this, and I'm not going to comment on what Andrei just said because I actually haven't gone into any of these details. But a tariff in general, any kind of tariff, is what's called a trade intervention policy, as in the government puts its hands on the scales of private businesses who are trading across international borders in some fashion. That's what a tariff is, and there's many ways that you can have trade intervention policies. For example, you could be a huge country that taxes all of its citizens heavily, and it collects all those taxes, and it gives all that money for free to the government to build infrastructure or private corporations to build manufacturing, so that then those businesses can create incredibly artificially lower cost of goods. That is considered a trade intervention, which China is doing. And they have been doing for like 40 or 50 years. So that is a huge form of trade intervention as well. So
subsidies.
Yeah, but also
subsidies is a trade intervention.
Basically, yeah. And it's anyway, yeah. So tariffs are one way to kind of offset the balance because if you think about this example of China, how would America right this wrong if it doesn't use tariffs? Let's say people say tariffs are too kind of what coarse. They're too they blanket too much. Your options start to get a little more difficult because then what China's basically doing is it's taking away the consumer consumption power of its people, right, and giving it to the manufacturing and government sectors. This kind of thing is really not tenable in a first world country, right? First world countries. That's why we have consumers in the first world have so much more what's it called, economic power compared to countries like China. So then you can't really take money away from the citizens in first world countries to kind of offset, as in like do a counter trade intervention to this to then make our goods competitive with them. So again, how are you going to capture this? I don't know. It seems one way is to you could look kind of very, very coarsely at trade imbalance, like you were saying, Andrei. Not to say that this is what they should do. I'm just saying it might be more thoughtful than it appears at first glance.
No, I mean, I think it's a great way of like doing it, to be honest, because I mean, I think their stance is that like the trade deficit is because of a combination of tariffs, unfair practices, currency manipulations, all these things, right? So it's like that's the reason we have a trade deficit. So we need to use that as like the core metric, and then do something on top of that, which I think is like fine. Because like the thing that I think always happens when people start like critiquing these things, it becomes like so like nitpicky of like, well, they can't have done it that way, and it's like, okay, what way should they have done it? And like then it just ends there. Because like, well, I don't know, like, but clearly it should have been more thoughtful and more thought out and more like deeper analysis. It's like, okay, what do you actually want to see? And that's like where I think the conversation like gets really lost on people, where it's just like, okay, we're just going to take this approach and start with that and see where it goes. And I don't know, I kind of like that a lot more because it's the same thing that you see with like Doge initiatives, where it's like they can't be doing it in this way. I support this like, well, what way should they be doing it? And it's not concrete ever. It's always like they need to be more thoughtful. It's like, what does that actually mean? So.
Yeah, this comes to mind. I don't know if you guys saw that clip earlier this week. This is kind of a related note, but the Jon Stewart or Ezra Klein clip that went viral, talking about how wildly inefficient the government is. And yeah, I mean, if you really start to like you say, Andrei, like, oh, you want to make this very thoughtful and incredibly crafted, how long is that going to take? And how many people are you going to need, and economists and PhDs to get in there to make this the best and possible version of a fair and blah 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 blah? It might take months or years, or maybe you'll never do it.
And then what will they actually come up with? It will just be this convoluted thing, and it's exactly like the Ezra Klein. It's like, okay, we put in so much. It's like nobody's going to do this.
Yeah, and that's what you saw is that exactly. You saw after 4 years, the Biden admin's super fair. Let's build internet for poor people in America. Zero. They've done zero. So yeah, I mean, dude, I actually agree with that. Yeah. This is probably not the optimal way, but at least it's doing something.
Okay, now regardless of exactly how the tariffs were calculated or determined, people are saying that the average US weighted average tariff across the board, once all these orders go into effect, is going to be estimated. So there's different estimates, but somewhere between, let's say, 23 and 27%. Okay, now that puts the average US tariffs in the range of what was in place in the 1930s. Okay, so unprecedented, right? This is once in 100, like, of change. We've seen tariffs go down dramatically over the last 100 years, and now they're back to that level. Okay, now that's one thing. Now I just want to, for our purposes, how did the markets react to this news? Okay, so like, first of all, we had a pretty sharp sell-off in US equities, something like 5%, pretty immediate dump. I don't see a bounce yet in US equities. Gold also dipped around 2%, but it seems to have bounced and mostly recovered. Remains to be seen. By the way, it's for people who are listening to the recording of this, it is Friday morning in Japan, Thursday April 3rd evening in the US. And Bitcoin also saw a dip, something around 5-6% from its high, which was around 88,000 to as low as 81.5. We've seen a bit of a recovery now at the time of recording, sitting around 83K for Bitcoin. So this is how the markets that we care about have reacted initially. Any thoughts on the short-term price action of Bitcoin and crypto markets, let's say over the next few days as the markets digest this?
I think a lot of it will depend on how long these tariffs stay as they are now, and then if they come down, how much do they come down? Now, I personally hope that they remain in place for a bit of time, because I think that the trade imbalances, as it concerns America and the people it trades with, are wildly, they're out of whack for everybody. They're not good for us. They're not good for the other countries. So I hope that you see the Trump admin kind of stick to their guns, weather this kind of shrieking, shrill panic right now, and then it's like, kind of like a game of chicken, right? These countries are like, we're not going to move our tariffs. We're going to increase our tariffs, right? Japan, China, etc. They should probably come off their tariffs a bit, right? And then America will. That's what I think the kind of the best case scenario. So again, though, it'll all depend on whether they stick to this or not, I think.
I would say pleasantly surprised by the Bitcoin action. Like usually when we have these like big, I don't know, market-wide dumping events, you know, if the S&P drops 5%, you'd see Bitcoin drop 12 to 15 or something like that. When you see it like at parity, that almost it feels like outperformance, even though it's probably like about the same as the S&P, but it seems like outperformance. Now all alts got wrecked again, but pleasantly surprised by Bitcoin, I would say. I don't know if you guys have the same like gut reaction on that.
Yeah, absolutely. I feel the same. And I do think that as there's still a lot of uncertainty. Okay, we were hoping to get some certainty, but and that's what there was some certainty provided, I guess, by this announcement, Liberation Day announcements. Like we know broadly what it's going to be, but as everyone knows, things could still change. So I don't think that the price of assets is fully like what it should be. I mean, let's say that there's some renegotiations. What's going to happen then? Right? There's still a lot of uncertainty, so I think we're going to see a lot of volatility here in the short term.
I would add that.
Go ahead.
So I was just going to say I would add that. So in the interview I had with Arthur Hayes, was that like a month ago now? He's been pretty accurate on this, and I thought it would go like this too. Bitcoin dumped more in percentage terms than traditional markets did, right? So traditional markets before this current move down, they dumped around 10%, right, off the highs, and Bitcoin it was 30. So Bitcoin usually leads in all respects. And it kind of makes sense that it wouldn't dump that hard from here, from that perspective, because it already has kind of pre-dumped, if you will. Now, I think Hayes said that, and I mentioned this on a previous Token Narratives, he has the S&P going down as low as, from peak to trough, 20%. And so that would be quite a bit further from here, right? We're at, what are we at now from peak to trough?
About 5
currently.
Yeah, but
12%.
About yeah.
So 8% more would bring us down to I can't see my whole screen.
Low, high 4,000s.
Yeah, and that's exactly what he said, about 4,800. I think if we get that, right, like you could imagine tariffs sticking and things kind of worsening for a little bit. Bitcoin is going to dump again. That's what I would guess, right? If traditional markets continue like this, I think Bitcoin would then further dump. But up to now, it doesn't seem like necessarily it would.
I feel like the worst is priced in at this point with tariffs. Like, I think it only gets better from this point, right? Like, where I think the whole strategy is exactly what you kind of mentioned. It's all going to be now negotiations with every country of like, we already saw this with Mexico or whatever, where it was like, you're tariffed. Oh yeah, you guys agreed to like do this on the border. We're taking them off. Now it's just like at a much larger, more diverse scale of countries. So who's going to offer this or that or the other, and the tariffs are going to come off. I don't know what those will be. Will they be like tariff restrictions, or will they be something like something else? Like my theory is a lot of it is going to be about bringing factories to the U.S. because Trump's whole plan is like we need reindustrialization. We need reindustrialization. They can't really build those factories themselves, but they can do what Toyota and Honda are doing, which is like, okay, we'll just build the Toyota factory in the US and then we can, sell the cars without tariffs. So I think there'll be like these kind of I don't know, exchanges that will lead to the reduction or elimination of tariffs for most countries. That's like for the like extra rates. What I'm really curious about is if the baseline 10% stays for everybody no matter what. Because that's the other thing that we didn't talk about. Is like the baseline is 10 and there's like addition on top of that. I think there's probably a lot of wiggle room on the additional portion, but I'm very curious if there's any wiggle room on like that baseline 10%.
Just zooming out a bit. So the plan, right? The U.S. administration's plan, as outlined by folks like Howard Lutnick and Scott Besson. The plan is, and Elon Musk and Doge, the whole plan is reduce spending on the one hand, increase revenue through tariffs on the other hand, and then the other prong of it is to ultimately reduce the income tax, especially for people, what was it, earning less than 150K. Now, let's say all that happens. Okay. You got
that's what liberation feels like, Graham.
Right? That's it. You got the middle class, right?
Not
people
for him.
earning
He's Canadian.
less than 150K. Soon to be American, all right? Less than 150K. The middle class, they get their income tax slashed, right? In this, if everything plays out as it should, all right? Now, what does that mean for asset prices, especially like Bitcoin, crypto? Well, that all plays out.
You have to separate two things, though. Like, is Bitcoin different than like a traditional financial asset like equities? And if it is, that would inform how you think about it. And if it isn't, then you would see that. I mean, Besson.
Okay, let's say it is.
Okay, so Besson has said very explicitly that he's not really concerned about the stock market, and it's done really well for a long time, decades, well above its what's it called, 20-year average or whatever.
Yeah,
and so you have people like Jim Bianco saying that we're going to have for the next 10 years, the stock market is going to underperform its average. Right, so it's average. It averaged in the past 2 years like 20% or something ludicrous.
Yeah,
I think the whatever it is, 20-year average is 9%. Right, 8%, something like that. So he's saying for the next decade, you should probably expect 4 to 5%. Right, which is still positive, but it's about half of what it normally does on average. And so if Bitcoin is like that, and crypto is like that, then you would see kind of flat to maybe slightly positive gains.
But don't you just see like Bitcoin being the more risk-on asset that people, let's say, I would say like the interesting thing there, especially with the income taxes, now it's not institutional money come in, you're back to retail money coming in, which is what we saw with what do you call it, the COVID relief checks. So now where does that retail money flow? I feel like the retail money flows much more into Bitcoin, meme related stocks, like, I don't know, like individual stocks rather than like big institutional, purchases of I would call them like blue chip equities or something, or like tech equities. I don't know. So could there be a new retail frenzy? That could be interesting, particularly for Bitcoin. Maybe less so, like you said, for the stock market, which is much more high volume, much more driven by institutional involvement.
Yes, and I think that cohort of people, the ones earning less than 100,000, 150,000 US, if they get their income tax slashed, like that cohort of people, they're young, they got families. Like these are the type of people I feel that are kind of over the stock market. They don't trust it. And that's like exactly the type of people who like throw in their money into Bitcoin and crypto. It's the new alternative financial system. And so it could bode well. But this is all pretty mid to long term. And
I separate two things out. I think in the midterm, like 6 to 12 months, I think you'll see a run up probably in crypto and maybe even in risk assets. But over a longer horizon, I actually see it not having as big of growth as it has. I don't know.
Well, you guys see things from a shorter term time frame. So are you expecting a further dump April 9th? Because Andrei, I think you mentioned that it looks like things are priced in.
Yeah, I mean, I think we're close to the bottom. Like, maybe we go down another, if we're talking S&P, like 3 to 5%, like maybe. But I think even some articles that I was reading, like South Korea, a lot of countries are already like, okay, we just want to negotiate. We want to make a deal. Like, what deal do we need to make to get rid of these? Because
it's probably going to be good news.
Yeah.
But rather than bad news in the future. Because
the way I think about it, like I had a conversation with somebody else, this is like, so these are all export. So this is a crazy stat. 30% of Vietnam's GDP is exporting to the US. Like, so if they have a 90% tariff, that's like literally just getting rid of 15% of their GDP. So, and the interesting thing about it,
that's an instant recession. Yeah. That's an instant recession. That's like instant recession.
I don't think those two things are those two things flow from each other. Just because there's a huge tariff, it doesn't mean their GDP goes down.
I mean, I think they'll have to pay.
Not necessarily.
Maybe they'll pass on to consumers.
Have to pay. Yes, that the consumer is the one who pays.
No, but Graham, that's if they pass it on to consumers are going to stop buying in America. That's the point. They're going to look at the Walmart goods and be like, I can't afford this.
What else are they going to buy?
They're going to stop buying. The buying goes down, right?
I mean, so it'll definitely have like a big effect. Like, it might not slash it like just immediately day one or something like that. But and the problem for all these countries is like, it's not like they can. We talked about this last time I was on the podcast. There's no demand outside of the US. So somebody was like, oh, these countries are just going to band together. It's like, they're all selling to the US. They're not going to just start selling to each other. There's no demand. The US is like the only customer.
Yeah, exactly. And China knows this too. Like, so nobody can buy this stuff, right? Like,
real life shit coins in manufactured goods. They're holding bags now.
Yeah, they're basically all these DeFi protocols for the past 3 years. They built this beautiful infrastructure. No customers, no users.
So we saw Bitcoin drop about 5.34% last night after dinner, and immediately the bunch of us get onto X, and all I saw was the memes of Donald Trump and the penguins, and that he's tariffing the whole world, penguins included. But Andrei, I think when you were describing how countries sometimes find their loopholes, for example, exporting to an intermediary market for their goods to end up in the US, do you think this blanket-wide global tariff policy is a way to kind of weed out those types of tactics?
Yeah, I mean, I think it's partly that, and I also think it's partly just trying to bully everyone at once. And trying to, what do you call it, cause a scramble for the first person to negotiate. Because it's kind of like now the first person that comes with and gets a good deal, they're out of deep water, and then the longer, the next country is going to get a worse deal, and the next country is going to get a worse deal. So doing it on everyone at once is you're just trying to strong arm the whole world, including penguins, trying to strong arm the penguins into doing what you want. We'll see if it works out that way, but that's kind of how I
did the penguins even say thank you? That's what I want to know.
They're protecting them from invasion.
There's a lot there's a lot of interesting kind of wrinkles to this though that make it very interesting. Like Graham, I don't know if you can pull up the Fed guy tweet that I put there.
Yeah, I got it.
So some of the people I follow, actually one person that I follow doesn't think this is right, but most of the kind of economic players that I follow think that this is approximately right, and Fed guy has been killing it this past year. He says that these tariffs, if they stick, are dovish. Basically, what that means is it's kind of it will lead to economic easing from central banks, especially the U.S. central bank, and so tariffs in general are dovish, and big tariffs are very dovish. And I actually really think this is true. So let's say, worst case scenario, these tariffs stick. Everyone's playing chicken. Nobody's backing down. And so these tariffs continue for like a month, or like a month and a half. And we get to May, and the S&P has fallen out its own ass, and it's down 20%. Bitcoin is probably down. Alts are all down. Everyone's, Trump is terrible. The whole world's on fire. You get to the FOMC mid-May meeting. Who is going to bet against them easing? Like seriously, you think that you think that they're not going to lower interest rates? So
this is the classic bad news is good news, because what bad news means is money printer go burr, and then our assets pump. It's the classic. Right.
And here you have
all
a guy
roads lead to money printing.
Not all roads, hopefully, but here you have a guy who's been hitting it for like, I think 12 to 18 months. He used to work at the Fed, and he's saying this. I agree with him. Pretty much everyone I know agrees with him. Again, that's kind of the worst case scenario. I don't even think it's going to be like that. I think it'll probably be more like what Andrei is saying, where it'll start to kind of unwind, right? The tariffs will start to unwind. But even if the 10% tariffs stick, and you do see the economy kind of slow down and get noticeably worse in the next month and a half, I think that the chances that the Fed will cut grow and grow and grow and grow. And so those haven't been priced in. I think if I remember correctly, they were pricing in like 1 or 2 or maybe 0 cuts for the remainder of this year. And so again, markets are forward looking. If there's no prices, if there are no cuts priced into the market right now, and then we get cuts, that should be stimulative.
Yeah, I think this chart I've got up here too somehow is related. This is the chart posted by Trueflation, which is the real inflation data supposedly. And they've noted this correlation, right? Which is every time Trueflation's version, inflation number, bottoms and then starts to uptick a little bit, you see a surge in the price of Bitcoin. And as you can see here, it's like showing a few points where that's happened. And the current situation, as we're about to get to at the very bottom, right? Trueflation has hit a really low number and is starting to go up a bit. And so the prediction is you're going to see another surge in the price of Bitcoin. Now, I think this is a similar mechanic or dynamic as to what, David, you were just describing, where like the numbers in the economy cause the Fed to do something, which causes assets prices to do something else, right? So it's like this, I don't know, like Rube Goldberg machine thing. So anyway, that's an interesting point here.
Yeah, I mean, that just strengthens David's argument too. If like inflation's down, just more reason to lower the rates. Like, what's if we have very low inflation? And like, this is something that I've been wondering, like, because I think like the anti-tariff side is like calling tariffs inflationary, but I don't think that's true or like in the conventional sense of inflation. I don't know if you have like any thoughts around that, because it becomes like a very subset of goods that are actually raising compared to like prices across the board. I don't know if you have any thoughts on like, are tariffs inflationary or not? Yeah.
I think in general they are, but it does really matter where they are and who is being tariffed. For example, let's say that we have kind of blanket tariffs on Canada. That would have, I think, pretty strong effects on the cost of building a house, right? Because we get a lot of our lumber from them and other materials for that. And then apparently, like, that's one of the strongest indicators of an increase in inflation is the cost of housing and building houses and stuff like that. And so that would be way more inflationary than putting a tariff on Vietnam, and the cost of plastic beach balls that you get at Walmart increases. I don't know. Probably inflationary, but just very small effect.
I think it's like this. I think they like have all those like charts where it's like what prices have increased like the most over the past like, you know, like 20 years or 30 years, and it's like education and healthcare, like, you know, like way, you know, up and to the right, and then it's like your TV has actually decreased in price. So I'd be curious like how much the net cost of living is actually affected, because like the things I would see that wouldn't be affected would be things like, you know, education, healthcare. Like those are like big boy expenses, and probably are not going to be affected that much by tariffs compared to like, yeah, your TV might be twice as much now, or like whatever. So I really wouldn't be interested in like how much it actually affects that like inflation.
Yeah. Has the price of an iPhone just gone up by 50%?
I mean, it's been going up for like 10 years, right? They just increase the prices automatically almost every time.
50% increase is crazy though on an iPhone, because they're already like 1,500 for like the best one. You know, if you upgrade every year, which I think is crazy, and you're going for the iPhone 16, whatever. Imagine that, like $2,000 for a phone.
I mean,
it's mostly produced in China, right? The iPhone.
Yeah. They've been moving away.
To shift manufacturing to India for a while, but
and it didn't work.
Nah, the QC was bad. So it shifted back to China. I don't think they can find alternatives.
They're not going to be able to shift it back to the US.
Not
so
overnight.
You're just going to see higher iPhone prices.
Yeah.
Maybe. Or Apple should stop having like 30 or 40% gross margins. Like I think they have the highest gross margins of any company in the world, full stop. So I don't know. Maybe they could just accept a little lower on that.
But they might even consider a model that Toyota and Honda have taken. So the Japanese have always been known for their manufacturing, especially coming out of the 90s. But at some point, they involve parts being manufactured in China and then shipped to Japan for assembly before being exported. So it's still exported as a Japanese product, but components manufactured elsewhere mean that, you know, the bulk of the work is still done in China. So I wonder, you know, as far as iPhones go, would it make sense for them? Because you're dealing with microcomputing, I suppose. I don't know if I butchered that term, but would it be cost effective for them to, you know, produce these parts and then ship them elsewhere for assembly?
I mean, that's like Trump's dream, is that Apple is now going to be manufacturing iPhones in the US. I don't know how likely that is, but we have seen some movement where like, I think TSMC has some like new joint venture with Intel now.
Yeah.
And like Intel is like just a dog that has been a terrible company for like years and years and years. There's no way TSMC would be partnering with them except basically to get over this like regulatory hurdle. So maybe we'll see more of those kind of joint ventures.
And I'm all for it. I'm all for it. I am 100% for this. I don't think you'll see iPhone production move to America exactly, but you could see it move to Mexico or parts of Latin America, for example. And that is something that the Americans want. That this is exactly what we want. We want to shift it away from Asia, especially these vulnerable parts of Asia where China has this developing sphere of influence. And so to me, this makes sense. By the way, I just looked up Apple's gross margins, which aren't public, but the estimate is around 45 to 47%, and on their highest, most expensive products, it's 55 to 60%. So,
yeah,
crazy.
Yeah, so
I'm
they
not
could afford
upgrading
to
anytime soon.
they
What a
could afford
racket.
to, not charge as much of the phones, but I don't see that happening. They'll probably also bump up their app store rake, whatever it is, fee,
Yeah,
like
exactly.
across the board. All right. Any other thoughts on the tariff debacle?
The best thing that I saw come out of this whole thing is, I guess I'm one of those people who don't see it yet as such a big deal. Like I think it is a big deal in terms of this is a huge development, but in terms of it's this kind of existentially negative thing, I don't see that yet at all. And the people who are doing that like 2 days afterwards, I just think they're kind of insane, right? Like, oh, this is the end of blah 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 blah. America has just shoved itself has impaled itself on. It's like it's been a day and a half. It's just crazy to see these reactions.
It's interesting because it's okay. Obviously, there's all the anti-Trump people. They're just like this is perfect for them. Like, look, everything's falling apart. Okay, but on top of that, you also have all like the asset, the finance bros, right? They are going to be losing money here, or not making as much as they want. So they're all pissed, right? Like we should be pissed, but actually, like I don't know about you guys. All right, I'm in it for the economic freedom.
In it for the long haul.
Sorry, I couldn't say.
You couldn't say it with a straight face.
No, but this goes back to your earlier point, Graham, about the people like making under 150K and like this being like Trump's base. It's like they don't care. They probably have zero to
exactly.
very small amounts.
Yeah,
in 401k.
They want to see exactly. They want to see like the top 1% making less money and them taking more of the pie, right? Like that's what people want. There being more jobs and all that, right? So
the post that I think best sums this up is the Rudy Haverstein quote that I put in. It could be in the show and tell, but I think if you just think about all these people like screaming online, and you take that he tells that thing, the whole thing, because it's perfect. That's what I want to yell to all these people who are just like losing their goddamn minds. Is just channel Sammy Jackson.
It's a Trump derangement syndrome. It's a strong disease.
Like, you could be right. Honestly, it could be a terrible mistake. And in a week or 2 weeks or a month, maybe we might know. But a day? 1 day? I mean, what are you doing? What are you doing? Crazy.
All right. You want to cover some other topics here, gentlemen?
Yeah, can we talk about the Circle one? I think there are a couple of interesting questions about that.
Yeah, so let's sum that up. Circle IPO is saying has announced that they're going to IPO, right? Let me see, bring it up here. Okay, who's this guy? Is that Jeremy Allaire?
That is him.
Is it okay? All right. So, Circle Internet Group Inc. is aiming to go public. Now, when you do that, there's this thing called the S1 filing, and it has some juicy details where we get to see the inner workings of the company. And it looks like from 2020 to 2024, their revenue increased from 15.4 million in the first year to 1.7 billion. So what is that, 1,000x? Okay. So yeah, is their revenue driven primarily just by the T-bills, just by like holding like the
Gotta
interest on the T-bills?
Yeah.
Okay.
Holding
now,
other
David,
people's money.
You've put some questions here into the doc, which is Tether seems safe as the number one stable coin. Is USDC going to be squeezed by competitors like PayPal's PYUSD and presumably a bunch of others coming out soon, I guess, from banks and other entities?
All in the US,
question.
yeah.
Absolutely. I think you even see this. So I actually think it's less going to be by the PayPals of the world, but it's going to be more by these like DeFi native coins. So you have like Athena's US was it USDE and staked USDE, the ones that are offering direct yield on chain from the T bills. So people are already doing that, right? So that margin is going to get destroyed if they're making 4% or 4.5%. Now competitors are offering that directly on chain, directly to the user. Maybe they give 3 and keep 1 or like something like that. So now your margins are going to get absolutely squeezed.
Yeah,
I do not like this IPO.
Just let me. Can I just jump in for a sec on that one, Andrei? Because I was listening to an interview with Paolo Arduino, the Tether CEO. Now, obviously, he's biased, right? Because they're printing money by not passing on the yield, right, to their users. Anyway, he says Tether's main customer base is like all people outside of the US, right? And the reason they hold the stable coin is just because it's access to US dollars that they couldn't otherwise get. It's easy digital access to US dollars. And he says they don't care about 4% yield. So they're totally fine with Tether just continuing to like rake that in for themselves. What they really want is just the stability of the US dollar.
Yeah,
I agree with that.
But if you have the
I think Tether's safe. I think USDC is going to be
because it's
squeezed.
the US stable
because
coin.
It's a US
the yield
coin.
Does matter.
Yeah. And I think you're going to see, like, to Andrei's point, but I think you're going to have BlackRock and all these like just mega firms step in and look at what BlackRock does with their ETF. They're fine taking a tiny sliver of what's it called, management fee, right? And so I can imagine them having their own stable coin as well. And yeah, like Andrei was saying, a race to the bottom in terms of how much of the yield they're going to retain for themselves and how much they're going to pass on to the customer. So I think USDC or Circle is going to be kind of hit pretty hard on this.
Yeah, I mean,
so maybe that's why they're IPOing now. Better get access to that public money now as soon as possible. They know they can see the writing on the wall.
Yeah, and I mean, I think like people don't necessarily like care about the yield that much, but if it's like I'm a user and I'm like, okay, I can buy this USDT or this USD XYZ, and that one gives me 4%, and like both are like considered equally safe, I'll just pick the USD XYZ, right? Like,
of course, yeah.
So like, yeah, I don't really buy that. Like people don't want it. It's like, well, you're keeping it all. There's no competitors that are giving it to you. So yeah, but race to the bottom. Strong sell on the Circle IPO.
Yeah. Now, David, you added another question here in the doc. Is Coinbase plus Circle via Base plus USDC a killer combo? So are you saying that like that could provide the moat here?
Yeah, this is the way out of this.
Opinion. Yeah.
Is this the way out of the trap? Because I saw this from a post earlier this week, and I've thought about this for a long time too. Anyway, but I think stablecoins in general are going to, again, everyone's going to make a stablecoin. Everyone and their mom is going to be making stablecoin. And I don't think it's going to be enough even just to offer yield, honestly, because that's easy to do too, right? You're going to have something like Athena, which has like its own moat in it or whatever. And Coinbase with Circle and the Coinbase wallet and, sending USDC for free, right? That's subsidized and all this kind of stuff. And maybe it has on base, it has extra privileges and things of that nature. That to me seems like it could be a way to keep it relevant in this coming stablecoin war.
Yeah. I think another sort of wild card here is what kind of stablecoin legislation actually gets passed, because it's unclear whether they will be allowed to offer yield to the holders of the coin. I think that's still not decided. The latest draft, I heard rumblings of like the banks getting in or something, or like that was the rumor, and trying to steer this legislation towards not being able to allow yield for holders. So that question needs to be answered first.
Evil banks trying to protect their business, basically, right?
Yeah,
that's how they get deposits.
All right. Any more hot takes on the stable coin issues? Stablecoin topic?
I thought there was an interesting, I haven't gotten into this too much, but let's say that this version of the world becomes reality, which is you just see a proliferation of stable coins, like 30 or 40 stable coins. How are you going to swap between all of these, and what kind of weird intermediaries are going to have to kind of come in to make this seamless? Because you could really see something like this, like Fidelity has its own stable coin, and so it's Fidelity customers come in, and BlackRock, Tether, USDT.
Bullish take for Ethereum.
Yeah,
Ethereum becomes basically this stable coin exchange.
That's one
hub
theory
or whatever,
yeah.
Right? Where I've been thinking about this a lot recently, where maybe Ethereum actually becomes a very good credit market instead of a token or equity market, where there's much more like yield trading or credit-based trading. And because it's exactly like you said, if I gotta have to swap between Fidelity dollar and PayPal dollar, and I have to I have to deposit into Fidelity, it's just a huge pain in the ass. But
it ends up being worse than Swift.
Yeah.
And ACH or whatever. Yeah.
If it's all on the screen, I can do the swap. Okay, it's fine.
Yeah, I think to me that's my base case, though, is that you're just going to see a lot of stable coins. And so it's interesting to me to think of what then new businesses are going to have to form to make it not such a ball ache to deal with, I
don't think there's going to be new. I do think that the credit market becomes very interesting then, because now you have and let's say they are all going to be offering yield of some sort. Now it's okay, am I going to be buying the shitty US dollar that has a 10% yield for some reason, or am I going to be buying the Tether, which is giving me no yield, which I know is probably not going to explode, or will I buy the the pirate dollar equivalent of that? So and then it just becomes this really interesting yield trading game.
But let's say, Andrei, that you get you have dinner with somebody, or let's say you have dinner with a group of 5 people, and then you pay for it, and then at the end everyone sends you stable coins, but they're all 5 different stable coins. You know what I'm talking about? Yeah. That's what I'm talking about. Right? Oh fuck.
Yeah, I don't know if they ever become that's the other thing. Do they become payment coins, or do they become savings coins? Kind of the equivalent of a Bitcoin, where it's you don't pay with these. You buy and hold them because they give 4% yield. That's also, I don't know if that will materialize or not.
I think they would be both, honestly. I think it would be, because it would just be like the most convenient thing. You have your stable coin, and then there'll be like a yield attached to it, and it'll just kind of happen in the background, except for Tether, I guess.
All right. I think maybe we got time for one more topic here.
Let's do it.
Any nominations?
Oh,
while you guys are thinking,
what was it? Oh.
I've got a funny one here, which is, let me just share this one. So, as some of you may know, the FTX redemptions are about to start. So, if you have one BTC, you'll get $18,000 because that's how much BTC was worth at the time. So you're down bad, right? But and if you have one Sol, you'll get 15. But yeah, if you held ETH on the FTX, you're good. Win for the ETH holders. Same price.
Oh man, it's so sad.
See, the whole fixed income and credit markets, it's just my copium. It's like, it's okay. ETH will just be giving 2 or 3% from now on. It's a fixed income instrument.
Man, what?
Solana has been getting wrecked,
I don't know.
though. Solana has been absolutely destroyed.
It's I mean, all the, what's it called? All the unlocks, right? You had massive unlocks in March, and then I think it's 50% of those of that amount happens in April, and then 25% of that happens in May. So,
basically, it wasn't priced in.
Basically, down only until May.
What's interesting though is I saw some stats on Pump Fund, and it's still printing pretty good. People are still using Pump Fund. A lot of meme coins launching. Pump Fund just launched like its own DEX as well. Pump Swap, I think it's called.
Yeah.
I haven't spent much time on the charts this week because of Southeast Asia Blockchain Week, but I did a quick scan on X this morning, and I saw a few KOLs commenting that the price of a token for migration to Radium right now is at $9,000. That's insane, considering it used to be around 60K, 60 to 70 in that range.
So the bar to
if I'm not
mistaken,
is lower this now. Is correlative to the price of Solana at the time. And right before we started the pod, what was it, like 114? So I'd buy more. I definitely would buy more.
Solana's a buy at this point. Yeah, I think that's no.
No, I say no.
David, no. If we get a bounce, Solana is going to bounce more than other assets. That's just how it is.
It's
going to bounce more than Bitcoin.
A great liquidity magnet, Solana. Not, I won't profess to know all the use cases and all the people who are building on Solana. And so far, the argument is that, it's good tech that's being built on it, but if it's only for liquidity extraction and to facilitate gambling, then what are you building for the long term?
Yeah.
A bigger and better casino.
Yeah.
Free drinks.
No, I'm bullish Solana long term, but I don't think I would, and I have a bunch of Solana that I didn't sell. I'm an idiot. But I think it's going to go down until probably until the end of April, right? Or unless the entire market bounces.
Yeah, I mean, I guess but if the weird thing is, like, if ETH is cooked, like, why do I think Solana will do any better, kind of thing? It's like, because they have a casino, and that's kind of like the only. So that's like the thing I struggle with like ETH and Solana is like they're like tied together. It's like if either one of them is going to do very poorly, they're both just going to be bad. Like I don't envision a future where Solana is like 5 times the price of ETH, and ETH is like, because like what's actually going to trigger that? Like I don't know. Like I don't have that in my mind. I don't know if you guys have something that'd be like, okay, this is how like Solana pumps, but ETH is going to be worthless.
I think narrative-wise, ETH is just in the doldrums, and Solana still has a lot of juice left, especially with its charismatic cheerleaders. But guys, do you want to know what one of the best-looking charts in crypto is right now? Any guesses?
Tell us.
Any guesses?
Okay.
It's not a small.
It better not be
WorldCoin.
coin.
It's not a small cap coin.
Okay.
Like beautiful chart. Seriously.
The meme coin?
I'm not going to say anything. It's let's just say it's a top 50 coin.
Top 50 coin.
Is it Doge?
No.
It's not WorldCoin.
Sui was doing pretty good.
Dude, pull up the Tron chart.
Tron. Oh no, I was thinking Tron.
Dude, pull it up, man. It's crazy. It is insane how good this chart looks. Start looking at it on the monthly. Look at it on the monthly. I don't know if you can. Oh my goodness. It's a monster.
Oh yeah. Yeah.
Dude,
Tron looks really good.
Wow.
If you look at it on the monthly
1 year.
Yeah, it looks crazy. Look at that. It's up only.
Based Tron.
Yeah. Look how well it's held up while the whole market's been puking for the past couple months.
And also, some stats came out
crazy.
in the last week or so. What was it? The volumes on Tron have exceeded Ethereum trading volumes, or what was it? I think it's trading volumes.
Where's all the volume coming from?
Well, it's primarily stablecoin trades between centralized exchanges.
That's
primarily.
Right.
So centralized exchanges allocating to their customers, trading, like moving assets between each other. And now this is supposedly due to Tron having like people actually using it for like USD payments, P2P payments around the world.
Shout out to Tron.
But I have seen some critiques of this. It does seem some of the data seems a bit suspect, but the chart does not lie.
So probably the explanation for the chart is this. So just for the viewer to be aware of, the probability that Justin Sun owns upwards of 90% of the supply of Tron is quite high. So there's no sellers, right? Nobody can sell in size in Tron, right? And so,
so it's underowned.
It's underowned,
as long as you believe in Justin Sun not dumping on you.
Exactly, 100%. Yeah, that's basically it, right? And you get this like absolutely multi-year gorgeous chart, just unbelievably nice. I don't know. It's a weird thing.
Yeah.
Okay, so sell Ethereum, Solana, Circle IPO, but buy Tron. That's the final word on this podcast.
By His Majesty's coin.
It's funny how Tron is just so like universally derided. It and Cardano, and a few others. Yeah. But yeah. All right, gentlemen, let's wrap it up. So thank you to everyone who joined us on the Token Narratives podcast. See you next week. Adios.